Hey guys, so in today's video, I'm just going to break down this absolutely insane 1 to 6 risk to reward trade that I took this morning, which I also sent in the VIP group in my Discord. So follow along and let me show you exactly why I took this trade and why my entry was so aggressive. So first things first, I hope by now everyone has had a chance to download the Judas Swing framework, because this framework is exactly what is used to actually frame up this trade and execute. So if you haven't done so already, go down in the description, click the link, download the framework, and whilst you're there, hit the like button and also leave a comment. Subscribe if you haven't already. So let's get straight into it. So the number one thing that we want to figure out when it comes to trading and taking high quality trades is our directional bias. So if we go onto the higher time frame on EU, we can actually see that even on the daily, we are bullish. So as you are already guessing, I took a sell, which is counter trend, right? However, if you look at exactly what I'm about to tell you, maybe you'll see what I'm seeing. So we were creating a series of higher highs and higher lows, indicating that we are in a bullish market. So we've just put in a higher low and we're coming up to create a higher high. So if we drop down to the 4 hour, again, you will see a similar picture. So we've got a higher high, and in between all of this is complex structure. So our trading range is between this point and this point. Therefore, for us to continue bullish, we have to break above here. And for us to go bearish, we have to break below here, right? So taking that into consideration, I had these two high time frame confluence areas that I had marked up. So I had this up here, which was a nice supply zone, and I had this nice demand zone down here. So I was happy to take trades on either side. So when price ended up coming up here, as you can see, we've got this nice 4 hour supply zone. And if we look inside it, we've also got this 1 hour order block nested inside the 4 hour. So because we had this higher time frame point of interest, I was anticipating price to come up into here, give us some sort of reaction to the downside before continuing higher. And as we're all aware with the Judas swing, what we're looking for is a sweep of the Asia highs, and then we're looking to take that to the opposing liquidity, which in this case would be the Asia lows. And then this is where I was anticipating the higher low to be created before giving us a higher high. So that was my frame of mind when it came to taking this trade. And again, even if we look at the 1 hour, we are bullish. So we've got a higher high, a higher low, a higher high. And this is where I was expecting price to give us an entry to create this higher low before continuing higher. Right, so that was my thought process behind this trade. That is why I was happy with taking the sells up here, even though they are counter trend. So now that we figured out our directional bias, we go back to our framework and we can see that the next thing that we look for is the Judas swing to happen between the times of 7 a.m. and 9 a.m. UK time. And what we want to wait for is the liquidity, which is the Asian session. We want the high and the low to be marked out, and then we're waiting for a sweep, right? Waiting for a sweep of either the high or the low of the Asian session. So if we drop down to the 15-minute, we can see that the handy Asian session range indicator is showing us that we have our Asia highs right here, and we have our Asia lows right here. Let me quickly just adjust this because this is 1 hour ahead. So there we go. That's how it should be. So we've got our Asia lows right here because it starts from midnight UK time and it ends at 7 a.m. UK time. So that's our Asia highs and lows marked. So now we drop down to the 1 minute, and let me replay this so that you guys can see what I'm talking about. So there's our Asian session range marked up. Now we wait for a sweep of either side, the highs or the lows. And in today's trade, as you can see, we were anticipating sells. So we are marking up our Asia session range. And now we're waiting for a market structure shift on the 1 minute time frame. And once we get that market structure shift, we want to identify a fair value gap. And our fair value gap is going to be our entry. We're going to put our stops above the most local high, and then we're going to target the opposing liquidity. So there's our framework. Here's the trade. So I'm just waking up, come into my computer, coffee in my hand, and I'm waiting to see what price does, right? So there is 7 o'clock. So this was 7 o'clock right here. So after this, we're waiting for a sweep. And as you can see, right here, we get a sweep of the Asia highs, right? There's our sweep. So now we are simply waiting for a market structure shift. And now if I zoom in just a little bit, you guys will see that this is what I was looking at. So we've got our higher high, higher low, higher high, and now we want to see a break of this higher low, giving us a lower low, and then a comeback into a fair value gap before a continuation lower. So if we play price on, we can see that we've now got a break to the downside, indicating a market structure shift. We've got our fair value gap marked up, which is right here, which is also where I took the entry from. And after we've placed those limit orders, we're simply just waiting and seeing what price does. So we get tagged in, and immediately after we get tagged in, price starts to run. So let me speed this up just a little bit so that we're not sat here all day. So as you can see, price starts moving around, and eventually we get this nice clean break to the downside. So this is also where I told everyone to go break even, because once we broke this low, I was anticipating price to come up and fill this fair value gap that we had left behind. And after that, I anticipated price to continue lower. So this is what I was anticipating. And as you can see, we did come up, close that fair value gap, and then we continued lower. So it was at around this point, once we broke this low, that I told everyone to now go break even. So now this trade is completely risk free, right? There's no stops that are going to lose you any capital. So because we're risk free, we can simply just sit back and relax. And the reason why I said to go break even is because I don't want to lose any capital. So in this instance, looking back at it in hindsight, maybe I shouldn't have gone break even, because then if I hadn't gone break even, then what would have happened is price wouldn't have come back up like this and taken me out at break even. But that's all in hindsight, right? Hindsight is a very bad thing, because you can say that you would have done this or you would have done that. So we don't judge ourselves based off of hindsight. We judge ourselves based off of how we reacted. And for me personally, I went break even, and I'm completely happy with that decision, because at the end of the day, I preserved my capital. That break even could have more than likely been a stop loss, but instead I stopped it from being a stop loss, and I actually turned it into a break even where I preserved my capital. But overall, this trade was very good confluence. It was following a higher time frame bias with points of interest that price had tagged into, clean breaks of structure, and overall it was just a solid trade played by the handbook. And as you can see, I just sped that forward. Price did go full volume all the way to target, which was hit perfectly right here. So if I had held this trade, that would have been a beautiful 1 to 6 risk to reward. However, unfortunately, that did not happen. But nonetheless, we didn't lose any capital, and we live to trade another day. So I hope you guys found some value in this trade today. If you aren't already in the Discord, feel free to go down in the description and hit the link to come and say hello. And if you are in the Discord, please feel free to send me a message and chat to me in the Discord. Apart from that, guys, I hope you all enjoyed this video today and got some good educational content. If you did, again, please don't forget to leave a like and comment. And also, if you haven't subscribed, please do so too. So I will see you guys in the next one. Take it easy, guys.